Hello. Mic test. Hello. Mic test. Looks to be working fine at my end. So hello and welcome everyone to the 165th edition of the Trading Opportunities webinar. And before we continue, give me a moment here. Let me know in the meanwhile if the screen share, etc. is working. Hopefully you can see the YouTube channel on the shared screen and hear my voice. So today is 13th of June 2025. We skipped the last public webinar as I had some personal affairs to take care of. And the last one was in May 30th, I think. Let's check that very quickly. That makes it the first webinar for the month of June. And about half of the year is also gone with that, almost. So there it is. Last public webinar 3 weeks ago. Let's check the date. 123rd. How's that even possible? May 23rd. 1 second. One second. Okay, got it. So we had a private webinar on May 30th and we skipped the June 6th webinar. 23rd. 25. All right, guys. So I can see some comments in the live chat here. Let me just very quickly check them. Let me remove the last. Actually, we will need it later on. Good evening, Raghu. Good evening, Ativat. And let's get started. Whatever is fun. Thank you for the confirmation. I'll check the comments in detail later. I don't want to waste any further time. So welcome everyone to the 100 and what do you call 65th edition of our Trading Opportunities webinar. This is your host Nirav, and we had last public webinar supposed to be held last Friday, that is, but we had to cancel, which is generally not the case. Generally, I'm always there with you every Friday, 3 Fridays at least publicly and 1 Friday privately. But yes, sometimes some situations can happen which are out of my control, or if not out of control, those are sudden things that happen. So anyways, those of you who are joining in for the first time, I'd like to clarify that we conduct these webinars every Friday at 4:30 p.m. GMT. So if you want to join us live, you can look to tune in around this time. You can expect me to be a little bit late. Markets are running at this time, and also I have other things to take care of at times. Right? So, but the delay is only not more than 15-20 minutes. Without further ado, let me also clarify how we go with these webinars. We generally discuss the charts of, not generally, always discuss the charts of EURUSD followed by Crude Oil, Gold, SPX, and BTC. I'll go over each chart, discuss my perspective using Elliott Wave and an advanced technical analysis based on my proprietary research, and then I'll give you some time to you guys if you want to have your doubts cleared in regards to our discussion. Generally, that's the way we continue. And in the past webinars, which is the last 164 webinars, we have captured a total of 411 moves. In the last 163 webinars, I mean. What happened with our last discussion, 164th, we'll be discussing today in our current live session. And other than that, I'm the author of the book Think with the Markets, available on Amazon's Kindle edition. For business inquiries related to private Slack group where I cover these markets live on a day-to-day basis and post my live trades, you can send your requests using the contact us form and selecting the subject matter over here. Requesting details for Slack private group, and you can check my past track record, which beats the industry standards by quite a margin. All public information available here. It's all public. There's nothing much to discuss or say here. It's all available for you guys to check and all. So without any further ado, I'd like to now start this session. And first of all, here, go over the last webinar's recording. So for that, we want to go to the chart of EURUSD and see what was being discussed in the last webinar before we head on to the current live chart. Just let me know, guys, if everything is working fine one more time. And that will be good enough for us to go. And I'll check at my end at least at once. Hello, mic test. Yes, so at my end, it's working at least. So I'll continue. Just let me know in the live chat as well, Raghu and Tivat, Luis. Hello, Joe. All right. So as I was saying, we are going to check what happened with the last webinar discussion. We were discussing the chart of Euro, and looks like we were looking at a possible zigzag formation. A up, B down, and C up is what we were expecting. And that basically means we were expecting sideways to bullish continuation on this counter. Let me play the video very quickly and make the speed 2x at 1080p. That's about it. There's nothing really fancy here. We were saying that long setups above 1.15359, short below 1.11687. And as such, we had one private webinar and then there was also a week off. So things may have changed a bit, but I believe more or less it followed the path. So let's now head over to the live chart and see how things progress from there. Where is the live chart? Here on screen is the live chart of EURUSD. And let me just check from our private last discussion to public discussion. 1.11687. So it did trigger our cells. That is, it extended the wave D, I think. Let me check. 1 second. Not April. Sorry. We have to check for May, and there it is, 23rd May. 1.11687. Never breached the downside thing and only breached the upside trigger. The upside trigger was at 1.15359. Let's mark that. Just breached that. So it has triggered longs, and as such, I'm already holding longs on this counter of EURUSD. So that makes it a trade in progress because we do have a live trade, and also the analysis is working as we discussed in the live webinar. So the analysis is literally as it is. There's nothing off, even though we were not discussing anything publicly for 2 weeks straight. Right now, let's discuss the actual setup, actual trade that's happening here. And for that, I'll just focus on the last part. The important part is we are discussing from this point of reference. We have a wave 1 up, 2 down, and 3 up. In terms of Elliott Wave terminologies, this is an impulsive progression. Those of you not really familiar with this, impulsive progression is a rough 5-wave movement in the upward direction, which basically looks 1 up, 2 down, 3 up, 4 down, 5 up. Once the wave 4 is complete, we will look for a break of the last high. Rarely we do get a failed fifth, so we are not going to discuss that. So we are basically going to look at the break of this last high, and that will be called a fifth wave. So basis of that, I have already entered longs on this counter, and the idea remains that the market should sustain above 1.14870 because wave 4 can propagate sideways in general, and it can also go and do a price correction. In this particular case, it looks like the price correction has already taken place. So our basis remains that this market can go sideways in the box range, let's call it the yellow box range, and then head up. It can also straight off head up. So the idea remains sideways to bullish or straight off bullish. So H1 sideways to bullish, H to bullish. So both are suggesting upside movement with that stop loss being 1.144, 1.14870 roughly. Right, keep in mind we are using this data feed. If you are using a different data feed, the prices may vary a little bit, but more or less the theory, not more or less, the theory remains ultimately the same. That's about it for the discussion on euro. As far as the targets are concerned, I'm not really much concerned about the targets. It should first break out 1.16329, and at that point we will have more clarity on this particular price action in CN or bluish color, and once we have more clarity we can give the targets more accurately. In this particular case it's not even required, we can just pile up once we continue getting more and more confidence on the current situation, and that should be it. Right, nothing much to add here. I'll just check the comments in the meantime. If you have any doubts you can just push them in the live chat. Hello Raghu, good evening to you. Hello Ativat and Ativat, Raghu, both are our private Slack group members. Hello Louis, one of our regular YouTube viewers. Thank you for the confirmation. Joe, again, one of our private Slack group members. Nice to see you here. And thank you for the confirmation there, Ativat. Thank you for the confirmation, Joe. That means everybody's clear on the discussion, so I'll not waste any more time on this chart of euro. Let's now quickly head over to the chart of CL, crude oil, West Texas Intermediate crude oil specifically. Here, let's head over and check what was being discussed in the last public webinar on the chart of crude oil. Looks like we had a lengthy discussion on CL. We were expecting a 1, 2, 3, 4, 5. So on the daily chart, we were expecting a leg down. We were expecting this to be a impulsive correction with the current price action being in fourth wave. Keep in mind, this was discussed on 23rd of last month, 23rd of May 2025. After that, we had a private webinar, so things may have changed. But anyways, I think this definitely got invalidated 64.6. Now let's just check very quickly. It's not like I remember the pricing of everything. Maybe I do subconsciously, but not consciously. Yeah, so it has, as I said, taken it out by a huge margin. So things have changed. Didn't really work out literally as we expected, and we actually never really traded it either. The idea was wait for sell trigger, and sell trigger never came, at least not till now. And the idea is still wait for sell trigger. It's possible the analysis is just not going to play out that way. But then again, who cares? We get plenty of trades here and there. So let's now look at the chart of 1 second. Hello, Muhammad Yunus. Okay, so as I was saying, let's again look at the chart of crude oil and see how things have changed, because they aren't really necessarily happening as we expected them to. One idea that is floating right now in my mind is that from this point of reference, this, keep in mind, this is the daily charts, this is a long-term analysis. So from this point of reference, we are assuming that we have a down leg, which is what we call a W, and then we have a correction. Let's just call it X. So we will have another leg down, which is called a Y. All right. So down W, sideways for X, and down for Y. So that's one way of looking at it. This is basically suggesting hypothesis 1, bearish. Right. Second view is that is suggesting, let's call it yellow count. Second view is suggesting down W and X sideways. In this particular case, I'm assuming that the X is continuing, and we are assuming that it's an A up and B down in play. So that is, let's just call it a dot A. Double dot A. Double dot B, and then maybe double dot C is still in play as a possible diagonal structure. Who knows? It's again not really very, what do you call, important of a thing. After all, double dot A, double dot B, double dot C down is still a bearish count. So H2 is again suggesting bearishness. So as I said, I still don't have any trade on crude oil. It is still suggesting bearishness and still hasn't triggered our short setup. So it's still a wait and watch market on a swing perspective because we are using the daily chart as our data feed. Right now I have triggers placed, alerts placed, not triggers. 68.8 and what is this? 64.85, 845, whatever. So these are triggers which are already placed, and that just basically means that we will be interested in looking for short setups once these triggers are fired. If they aren't fired and if the market just continues going up, let's say above 80.317, let's just say, then perhaps we'll have to consider some counter possibilities. But until then, I don't have really much of an interest in this counter. Right. So simple enough, wait and watch counts both suggest bearishness. Unless we are completely wrong, we'll know that in due time, above 80 or something. Not much to discuss here. That was basically the whole thing. I'll wait for a few moments. If you have any doubts, just push them in the live chat. If not, just push understood or clear or something like that in the live chat so that we can just quickly move over. If not, I'll just wait a few moments anyways. One second. All right. So looks like everybody is clear. Raghu is saying he's clear. Joe is saying no questions for now. That means there is nothing to spend more time on this. Let's head over to everyone's favorite, the chart of gold. Thank you, Ativat, for the confirmation there as well. Text discussions from last webinar is a chart of some 100 plus points caught on gold. So we did discuss a live trade from our private Slack group last time. So here is the chart of gold as we discussed in our last private webinar. Let's see what was specifically being said. It looks like quite a lengthy discussion. Yes. One is a bullish count, one is a bearish count. 1 up, 2 down, 3 up, 4 sideways, and then there will be fifth leg up. Let's make it fast forward. So we had a bearish and then bullish. So it was suggesting short-term bearishness on the 15-minute charts of gold. I think the targets or triggers is set below 3270. See if there is anything else. Nothing much. So I think that was the play. We were expecting short-term bearishness below 3270. Nothing much to add here. This was a discussion on 23rd of May 2025. We had one private webinar after that and 1 week off. So let's see how much things have changed. 3227, 3270, sorry. There you go for the chart of gold. 23rd, 23rd, 23rd. Did trigger the short side, went lower a little bit, then went sideways and then up. So it, I wouldn't say it really performed, but I can't say it didn't perform because below 30 to 70, it has gone a good 20 plus points. 35 points something, roughly speaking. Anyways, so we can say it's a +1. I don't know how to categorize it. In case of euro, we had a +1, 30 plus points. I'll just call it a +1 here. I think we did trade it as well, but not this leg, the sideways movement. Anyways, coming to the actual chart, we have a long on gold right now. I'm in the long trade, and the idea is to see this market go above 34, 3500, sorry. As such, I'll probably look to close or exit above 34.76 if things work out. Right now, let's pay attention to the more important part, which is the count. So there is a point of reference, and we are assuming that this market is possibly forming a diagonal structure. A diagonal structure in Elliott Wave is basically a 5-leg structure which has an overlapping pattern. That is, if this first leg is called a 1, the second leg is called a 2, then the fourth leg will overlap in the price territory of first leg. So that's how we call it a diagonal structure. In this particular case, we have this over here. So in this case, you can see the price overlapping, or what you call the 4 overlapping the one over here, making a possible diagonal in play for us. With that out of the way, if this structure really is a diagonal and if really is working out as we expect, then this market should at least take out 3500 plus levels should be seen, since we are already long. And if it's not really working out as we expect, then the stop loss comes below 3310, let's say. So 3310 is our invalidation of the count, and target is not big, so it's an inverted risk to reward. Position size I have kept not very big, actually it's small, not to be more precise. So with that being said, that's the current play I have on gold. It's not a very good trade. I would say it's a kind of a risky one. Good according to my probabilistic analysis, but bad according to risk reward play. So plays like this, you really got to take the small position sizes. That's about it for gold. Mm. Let me know if you guys have any questions here on gold, and we'll take things further from there. If not, I'll just move over to the next chart of S&P. In the meantime, let me check if there was something else to discuss here. Not really. I have marked some higher levels as targets, 35.86. Let's just point them out. And higher levels. So these are the possible targets. That's it for gold. We are looking for more bullishness. You know the targets and the further bigger targets and stop loss. So what else would I even discuss here? Thank you, Mason Pereira, for the confirmation, and Mohammed for the confirmation. And Dawood. All right. So in that case, let's now head over to our next chart. Wondering, here's a question from Raghu. I think we're wondering on large stop loss, but now it's clarified. Yeah. So as it so happens, not every bet will have a very good looking stop loss of 3 points with a target of, let me deviate from our main discussion line here. So what I'm really saying here is that generally the books you read on trading will say that 3 points as stop loss, and targets should be 3 times, so 9 or 10 points, right? Right, Raghu? Isn't that what books say? 9 to 10 points target. So they heavily advertise 3 is to 1 risk to reward. That is, if you are risking $1, you need to make at least $3 if the trade plays out. But as reality works out, things won't happen like that. Not only just won't happen like that, they don't happen like that a lot of times. And if your probabilistic analysis or understanding of the markets is good, it doesn't have to be. You can have a trade completely invert, that the risk can be 3 and that reward can be $1. And if you are good enough, but I mean, you really need a very high accuracy, like 70% or higher. So I'm not saying it's for everyone, but in my case, as you can see, my track record is already there, publicly there. The accuracy goes higher than 90% in certain points in time for a whole year, actually. And even in our personal trading, there are weeks. I think for the last 3 weeks, it's 100%. So I'm not boosting or anything, boasting or anything. I mean, it's just that if you are good enough at what you do in analysis, you can play the inverse part and still do the thing, right? So don't rely too much on the bloody books. I don't think more than 1% or 2% of them are actual traders. I'm not saying all books are bad. Actually, I have one there as well. But you got my point, I think. So here was the comment from Raghu, which I missed out because the whole screen was blacked. So was the point clear enough? Raghu, Muhammad, Dawood, Mason, Joe, Ativat. These off-topic conversations are actually sometimes, not sometimes, most of the times more valuable, I believe. Give me a little bit of feedback, guys. So if you like these kind of conversations, we can include more of these in the live webinars. Give me a live feedback. And yes, of course, those of you who are viewing later on as the recording, leave your feedbacks on these off-topic conversations in the comment section. Joe says it was clear to him. Muhammad is saying clear. Thank you. You're welcome. Looks like everybody liked the conversation. Probably I should write another book. Actually, I was thinking of it 2 weeks back, 3 weeks back, something. 1 or 2 weeks back, I was thinking of restarting my book on trading with psychology as the main theme. Anyways, it was a big, long time ago. I started that project. Started and finished 2 chapters, but did not finish the whole book. Anyways, let's continue with our discussions and let's see the start of S&P 500. Let's see what was being discussed 2 weeks back and how things have progressed since that chart. New book, that would be really awesome. Nice. Some enthusiasm from our very small audience. Joe, the #1 fan. Right, Joe? Anyways, let's just think about it. And I'm also running busy these days, but it's been in the back of my mind. So I'll have to work on it sooner or later. Let's see what was being discussed on the chart of S&P 500. Here's the recording from our last webinar on this, what do you call, counter of S&P 500. We were discussing some bullish scenarios. We were suggesting 1 up, 2 down, 3 up, 4 down. Let's just play it again. So it looks like 5931 plus is a bullish scenario. And we are assuming the diagonal scenario as well. So let's see what was the outcome. All right, so I'm suggesting bullish movement. One second, let me back it. So here it is. So I'm basically suggesting bullish movement or pullback and then bullish movement within the region 5733 to 5580. Pullback and then up or straight up. So overall, it's a swing perspective, bullish counter, straight up or pullback and then up. Nothing to add here on the chart of S&P here. I think from our last webinar, it looks like that's all we were discussing. 733580. Let's go to the live chart. On screen now, we do have the live chart. Let's see after 23rd of May. So it did take support at 743, 10 points above our support region starting point. Right, 23rd. 1 second. 23rd of May is when we did the discussion. So I'll have to check the price on the chart. 1 second. So at the time of discussion, the market is trading at 5820. And the date is 23rd May. And we have long above 5931. So it was already there when we discussed it. So the shorts were not really triggered. 5931 is here. It did trigger the longs, I think. There it is. Triggered the longs, and it has since then continued going higher. Right. So that was the setup from our last webinar as well. Long consideration above 5931. I'm referencing it back again. 5931 is plus. So that was also the conclusion from two different hypotheses. Let's remove it, and we'll have to call this one a plus one because the trade has really worked out as discussed in our last public webinar. However, things have changed a little bit count perspective wise. Let's see what they are. Count perspective wise, I'm assuming that from this point of reference, which is the price level of what is this price level? 5742. We have what you call a leg up correction and then leg up. What is this really? A up, B down, and C up. So we are assuming a zigzag correction in play. First leg is complete here. Correction B is complete here. Diagonal structure is complete there. 1 up, 2 down, 3 up, 4 down, 5 up is complete here. After that, we are assuming that some sort of correction is under play for the C leg. Let's conclude it by taking a higher point of reference. So from this point of reference, price level around the level of 5977, we have a flat correction in play. Running flat, I would say, possibly running flat. So first leg down is called an A. Correction is called a B. Leg down is called a C. Leg down is A, correction up is B, leg down is C. So we are assuming that the C is in play. And then from this point of reference, I have already counted the A up, B down, I think here, C up complete for the wave B. And then for the C leg down, we have 1 here, 2 here, 3 here, 4 here, and 5 here. I'm assuming that's the play. I'm assuming it's a diagonal structure, and I'm assuming that it will continue the downward movement. And I personally would not like to take any shots right now, unless one second, unless we see a move below whatever that is, 5968. Let's just say below 5968, we are assuming a bearish play here. Bearish play below 5968. Wait and watch for now. And yes, if you are really big on risk taking, here is an exceptionally good setup. Small stop loss, and this is your big target. That's about it for our discussion. If you have any doubts or questions, you can push them in the live chat. Arun, first of all, I'm not interested in your take. If you are thinking it is something, just count it and do your trading. There is a rule with these live chats. Before you start commenting, we have 3 rules. One of it is you are not going to post your own count. You can have a question on my count. So if you are not going to follow the rules, I have to block you. I'm not your coach here. All right. So here is some questions and also step summing the whole chat. S&P multiple positions have been profitable for last 2 weeks, capturing 5900 to 6040. Yes. I think I didn't show the live trades. That's true. I haven't shown the live trades on S&P. What was the last to last week? Was it gold? I think these few weeks we have lesser trades, but all are wins. I mean, I know all are winning trades here. This week we had 2 plus. So number of trades have reduced, but the win rate and the moment captures have been increasing. Anyways, thank you for pointing that out, Raghu, one of our private Slack group members. And yes, small moment here to advertise my own services. You can request details for private Slack group by following the link, which is currently running out on the bottom of your screens, or use the description section if you are watching it on YouTube or some other platform. Right. And here it is for those of you who really want it in front of your eyes. 50eyes.com/contact us. Use the requesting details for Slack private group. And yes, I have to send them back as emails. Sometimes they will land in promotions and maybe even spam. These are emails. So just check that in case you are not getting the response. I always revert back, maybe a little bit late sometimes, but I always do. Mason is asking, do you think it will rally up after wave C completion? Well, that is a general theory, Mason. Once the C gets complete, we expect the market to go up again. However, I'm not very keen on making this whole thing a forecast. It is a forecast as such. If I mark this as an A down, BFC down, this by itself, without even saying, becomes a forecast or analysis, I should say. One second. Yes. So yes, to answer your question, it's short and simple. Yes. There's a question. Not question, is a comment from Joe, our private Slack group member. I was able to take the long trade on S&P from last week, booked profit this week. I have taken a lot of trades. That means, apart from these trades, because I cannot recall exactly the whole trade. I mean, I can recall it if I look at the chart in the Slack, but it has been a busy week. Anyways, that's good of you to let our viewers know, Joe. All right, so looks like everybody was profitable in this week. And why would they not be? We had a 100% winning week. And we have so far how many? 3 trades which worked out from our public webinar, which was conducted 2 weeks ago. What else are you looking for, guys? 2 weeks ago, we discussed 5 setups, and 3 have already shown and given profitable trades. It's all for free. It's all on YouTube. It's all been verified in front of you guys. Can't we get more likes for it? I mean, we have 12 viewers, but not 12 likes. What else are you looking from life, guys? Are you looking for the gods to come down to earth and then tell you that you should like this content? If you are benefiting from it or you are liking the quality so far, hit the like button. And yes, one more thing regarding the declining number of views, hit the share button and share it with 5 of your friends or colleagues. Don't think like Neerav says it every time. It's kind of important at this point. We are nearing an important number here. We are going to cross 170 soon. And around that time, I may have to reduce public webinars even further if I don't see any participation. We have already gone ahead and reduced one public webinar and made it private. So do your part, guys. Do your part. At least Joe gets the joke and the actual request, hopefully. Anyways, with that being said, I don't see any questions on this chart of S&P. Last we have BTC. Let's see BTC and our discussions for this week. So here on screen, we have the live chart of BTC in front of you, and let's see what was being said in the last discussion. Let's move it a little bit further. Once again. All right. So here is the discussion from our last week on the chart of BTC. I'm assuming that one leg up is remaining before any further downward movement. Price was around 109,654 and nothing, I guess. Literally nothing. 109,654, and we were expecting that the market will continue a little bit up, perhaps some pullback and then up, if not straight up. Why don't we have any further analysis on it? Because I was assuming that the third was already in play. within the circle 3, we have 1 up, 2 down, 3 up, 4 down, 5 up. That looks to be the play. Let's hide this and see the live chart now. On screen, we have the live chart of BTC 109. Where is that? 23rd, 23rd. 1 second. 23rd May. There it is. I think a lot of things have changed since our last discussion. Let me see, what was I saying there? 109,689 up, but it should not cross 102,214. That's important. No, sorry. Let's call it 102,500 because that's the end. That's, I think, is the alert line. 102,500 roughly. It did cross the alert line, so it did not trigger our bullish setup, and now it is hovering sideways. Let me just go back once again and see if something else was discussed. Nothing really. So last webinar, we were last week, we were or whatever the week was, 23rd of May 2025. We were expecting more bullishness, and we were assuming that it should sustain above 102,500. That does not seemingly has happened, and it does not seem to have triggered any bullish view either, I guess. Yes, I don't think so. So let's see what's the updated view. It's already in front of you. Here is the point of reference. And we have assumed that we are seeing an impulse in the other direction from this point of reference with a wave 1 up here, wave 2 down here. And then we have a 1, 2, 3, 4, 5 for 1 down, for 2 up, for 3 down, for 4 up, for 5 for third here. And then there is a fourth in correction. Right, so either the fourth is complete here or the fourth is going to continue sideways. In both cases, we do know that once the fourth is complete, there will be a fifth leg in play. Count still remains bullish. In this particular case, the alerts now have gone above to 110252. Very simple, above 110252, we are considering bullish setups. For those not interested in waiting that long, lower risk play is to enter longs wherever the current price is, roughly 104,985. Push the stop loss is a little bit lower than the right current low, whatever that is, 1006600. Let's call it 984. So let's call it 9855 not, roughly somewhere here. We can push the stop and expect the market to turn before it touches this level, because the correction for wave 4 does not look has more price remaining. But then again, it is BTC. It is known to do weird things in correction. But then again, that's a lower risk play for a higher reward. And I've discussed the whole setup here. I don't think there's much to discuss here. And yes, this setup, even though the risk is lower, the reward is expectedly higher. This much, basically. The probability is a little bit low because it looks like a wave 4 is weak, and we may have to relegate this count. That is a possibility. So the risk is real. It's not a very high probability setup at this point in time, I would say. It's more of a wait and watch market, to be precise. That's it for this discussion, guys. I'll wait for a few moments if you have doubts or questions on this chart of BTC. And if not, we can then conclude the webinar. Those of you stayed till the end, thank you very much. And of course, do not forget to like and much more importantly, share the content with your friends and colleagues. If you want to see more continued discussions like these and probably even more market coverage, right? Do not forget the fact that if you are new to Elliott Wave, we have a free video course. The link for that is in the YouTube description section. If you are much more interested and serious, then you can always head back to our website, head back to the homepage, or you don't have to head back, just go to the homepage. Here's the video course in the middle, and market analysis is always published at the bottom, or you can just check this blog posting. Lastly, those of you who have gone through the whole video course, we are going to conduct an exclusive 5 people only private training program, which is a long term program, training program LT, as in training program long term, exclusive for those of you who are really serious and have gone through my work, including perhaps even the book not just a video course. And of course, my public work as in the form of public webinars. So if you are one of those guys, you can always, or you should, on priority basis, head over to the training program LT page on the website and fill out this lengthy form so that you can become a part of the upcoming batch, right? And I guess enough of my words. You're very welcome, Mohammed. You're welcome, Luis. Same for you, Joe. Thank you, everyone, for staying till the end. And kindly do not forget to do your part. Don't see any questions here, only thank yous and stuff. So that means we are done for this session. Wonderful analysis. Thank you. You are very welcome, Raghu. Thank you for your kind words. And you're very welcome, Etivet. So with that being said, let's now put an end to this webinar. Thank you for staying till the end, guys, again. And I'll see you guys in the next one. Take care.